Yeah, I'm just going to act like you like each other.
Yeah, by all means. Yeah, that sounds great. I don't even know if these will work. Will these work? Testing. Okay, good. Go ahead and just test yours as well, just to make sure.
Testing.
No. Is it on? Okay, cool.
Testing.
Hi everyone, we're going to get started with our presentations now. And our first presentation here, we have Dr. Rick Rock of NFM Lending and Menlo, and Brock Cassidy of NewsZip. And in case you guys didn't know, they have a webcast, podcast sort of thing, Real Fridays. Usually it's on Fridays, but they are doing a special edition for us here on a Wednesday, live from Maine. And they're going to be discussing Maine housing and market updates and some technology stuff. Brock works directly at NewsZip for different technologies. And just to let you all know, this is a very interactive session. So if if something pops up that you want to talk about, and Rick and Brock will let you know as well, definitely feel free to chime in. And this will be, is it LinkedIn, Facebook, anything else?
And YouTube.
Yeah. So you could be YouTube famous for something good.
Or something bad. Yeah. Thank you. And so, thank you, everybody. This is great. We're really happy to be here. And typically what we do is we start off, I introduce Brock. We find it always interesting to introduce one another versus introducing ourselves. So do you want to go first, or do you want me to go first?
Sure. I can introduce Dr. Rick Rock. So Rick has done a really cool tour of the mortgage and really kind of broader housing industry. He started really on the tech side, on the vendor side, early mid 2000s. He built and sold and consulted for a number of really well distributed mortgage technology solutions. And then I don't know if he's ever explained it that way, but I think he basically made the jump to lending when he, enjoyed being on the vendor side so much, but not being quite on in the insiders club of being an actual lender. So then in the last, 20 years or so, he's done all kinds of different consulting, all kinds of different executive roles, from strategy to producing industry publications, and more recently doing a ton of M&A and recruiting, especially around the retail branch model nationally. And today he is the VP of growth at NFM Lending and helping them expand their national footprint. And they're pushing the envelope on a lot of different lead generation and kind of social media based strategies. So he's a great person to have here with both kind of the classic lending experience, but a good mix of tech and pushing the envelope with like social media strategy experience as well.
So thank you, Brock. And this is Brock Cassidy. He's the Chief Revenue Officer over at NewsZip. It's a real estate tech company. And one of the cool things that Brock, in preparing for the introductions, is he had Chat GPT'd me and created, it prepared a bulletized and a grid format of my history and background. So I thought ChatGPT did a good job.
I think I knew most of it, but I had to, it structured it a little better than I normally do, so that helped.
So I did the same thing on you, and it was as impressive as I actually thought it was in getting to know you over the last several years. He spent a bulk of his career at Rocket, and Rocket I think is the third largest lender here in Maine, and by unit volume, and which remarkably impressive career in evolving in this business. And how long were you at Rocket?
About 8 years,
ultimately.
About 8 years. Yeah.
So almost your first decade in the business, or even that much more from Rocket, and then has done such an impressive job in growing NewsZip, which is a technology company that connects the consumer, the realtor, and the lender in one sort of interwoven sort of experience. So you go to a realtor, and typically realtors have their own relationships with lenders, and it creates a stickier kind of situation if you're the pre-qualified lender to that consumer, that the consumer stays with that lender depending upon or whichever realtor that consumer goes to. So he's really single-handedly, in my view, and the founder of his company probably wouldn't like me saying this, but in my view, single-handedly has really put NewsZip on the map across the country. And so I admire what he's been doing with his company, and we've been speaking across the country, but also at this particular podcast.
Yeah, thank you. And Rick and I both have a good amount of ties around here. I'm from Presque Isle originally. Went to Bowdoin College down the road. So have spent time in the Maine ecosystem and a lot of time in the national ecosystem. So it's a fun excuse to be out here, and a fun market for us to talk about. And I know Rick lives between Vermont and Massachusetts these days, but has a lot of ties around New England and in Maine as well.
And so one thing really for the benefit of those watching right now, because we are broadcast live from LinkedIn, YouTube, and Facebook. I'm going to have my beautiful daughter, 17 years old, Emily Rock. Go ahead and she's our camera woman. Go ahead and stand up and just show the audience so that people behind the camera can see who's here. So we're up in Freeport, Maine, this beautiful, beautiful town. There's over 100 plus people registered for this conference. And sorry, thank you. Thank you so much. I brought her to Maine to look at some colleges because she's in that stage in life. I have seven children. She's number 5 of the 7. So she kind of blends in, but she's definitely the silent troublemaker of the bunch. So in preparation for this, my family originally, I'm the youngest of 8 myself, and my family spent some time in Bangor. A few of my siblings were born up there. My father was stationed at the old Air Force base that was up there. And so I said, I chat GPT'd. I said, let's start off with some jokes, right? And I said, give me 3 jokes about Maine, about people from Maine, right? Figured that'd be a popular way to start this, right? And so
I don't know them yet, full disclosure.
Yeah. And so so ChatGPT did it. The first one was, what do you call someone who lives half a mile down a dirt road with no cell phone service, 4 generators, and a PhD? Your new neighbor from Maine. The small talk, how do you start a conversation in Maine? You don't. You just nod, grunt once, and hope the other person doesn't need directions. What's the 5-day forecast in Maine? Monday, ice. Tuesday, mud. Wednesday, sunny. Thursday, more mud. Friday, surprise snowstorm. Okay? So just to be equal and fair and balanced, I said, okay, great. I'm from Vermont. I'm kind of curious. What would you say about people from Vermont? It literally reprinted the same 3 jokes, but interchanged Maine from Vermont. Like, what do you call somebody who lives half down a dirt road with no cell phone service, 4 generators, and a PhD? Your new neighbor from Vermont. Like, all 3 jokes were exactly the same. And I thought to myself, isn't that kind of ironic, right? We always like to kind of throw stones at each other a little bit geographically. And it's kind of interesting that played that way. And it made me think about, to some degree, to kind of loop this into work. I grew up half my career really as a mortgage broker. And then probably the last 15 or 18 years, I've been on the IMB side. And it was the late Dave Stevens who really said to me back in 2012, 2011, when I think the broker market share was 8-9%. And he said, Rick, don't celebrate this. This is not a good time in the mortgage sort of economic framework. And I said, well, why? Brokers are bad, lenders are good, right? And he said, no, this isn't right. Like, it's a 3-legged stool. We need a healthy depository segment. We need a healthy broker segment, and we need a healthy IMB segment. And it was really that epiphany sort of went off in 2011, 2012, where he was really right. We service so many aspects of the market, and the mortgage market is very fractured, and we see this in Maine especially, is fractured in a very healthy way, where lending institutions really focus on specific segments of the market and not necessarily any one particular segment of the market. And there's certain products that us as lenders aren't necessarily as astute in that some of the depositories are, and vice versa. And the depositories have done an amazing job here in Maine. I think it was like 50 plus% of all mortgages here in the state of Maine are done through the depository channel.
Yeah. Yeah,
So
between banks and credit unions, it's well over 50%, closer to 55%.
Yeah. So with that in mind, let's break up, sort of get a show of hands. Who's here from a bank, a depository? Okay, that's good. And then who's here from an IMB? Only one person from an IMB, independent mortgage bank. Who else? That's it? And which lender are you with again?
Mortgage Equity Partners.
Oh, you Mortgage Equity Partners. That's great. And you guys are headquartered in, is it in Worcester?
Linfield.
In Linfield, in Mass.
Yep.
That's right. And only one IMB, and the rest are brokers. So it's pretty much all depository. No brokers.
Well, let's see hands on brokers. Any brokers?
No brokers? Oh, real estate brokers. Well, you're a brave woman to raise your hand in a crowd of lenders. And so credit unions. Well, that's what I mean. Depositories, credit unions, community banks, savings banks. Yeah. That is incredible. That is really an incredible thing. And it's a kind of a beautiful thing. Vermont is very similar. Surprise, surprise. With respect to its breakdown between depository and non-depository. It's a very healthy sort of mix.
Yep.
So the question is, with that in mind, gosh, I didn't even expect that being so broken up like that. With that in mind, the question is for you, and we always we opened this up at the Tri-State Conference in New Hampshire. What do you think is the most burning question you guys have with respect to today's mortgage market? And one other question, how many of you are leaders, management and executive leadership and maybe ownership of your institutions? Like leaders, managers, owners. Okay. And then how many of you are loan officers? Okay, great. Good number of loan officers. And then vendors, and the rest are vendors. Great. That's good. When we look at the mortgage market, the question for us as leaders is, what does the data mean? Like, what does it mean when we say to ourselves, we need to grow in today's market? And so when we were looking at the mortgage market, particular to Maine, because New England is its own, as we all know, is its own category across the nation. It's utterly different. About 2/3 of all mortgages across the country are from the non-depository segment. And in Vermont and in Maine and New Hampshire, roughly about 2/3 of all mortgages, about 53 or 56% here in the state of Maine, are done by depositories. So it's a totally different calculus, which is why we all, to some degrees, chuckle at a lot of lenders that are from the West Coast who try to open up an office in Yarmouth, Maine. And we all know we give them 6 months before winter, and then they're out, right? Because production volume goes down. They look at the numbers and they say, this isn't going to be successful. And then they close that office down. And as a realtor, in the room, right? You say to yourself, who are you going to trust? Right? What lender do you primarily use in your community? And how long have you used Maine Savings? Yeah. And why do you stay with Maine Savings? You say because the service is poor, right? Yeah. No, you see, you stay with them. Why? Okay. So it's the product, but if they delivered poorly on the product, would you use them? Well, of course you wouldn't, Exactly. So they have a great products, really good service, and they've been around, right? So they've been extremely reliable, and you've used them for 15 plus years. It's really an incredible testimony how difficult it is to sort of penetrate sort of the main market. What are some of the other observations, would you say, Brock, in some of the analysis that we're doing this morning?
Yeah, I think it's impressive compared, we look at Rick and I both look at a lot of national data, go to a lot of national independent mortgage banker conferences. I'm on a committee with the National Mortgage Bankers Association. So it really, just doubling down on what Rick said, it really is almost the opposite throughout New England, and Maine, I think, is maybe even more extreme than what we were looking at in New Hampshire a few months back when we were speaking out there, in terms of the bank and credit union dominance. I was really, really excited and proud to see so many Maine institutions at the top of the origination list. I think in the top 10, there's Bangor Savings Bank. In terms of unit origination last year, Bangor Savings Bank, Camden National Bank, Kennebec Savings Bank, Androscoggin Bank, and a few others right around the top 15, top 20. So I think that's really exciting. I mean, in most states, you don't see that. Coming from the pros and cons of my background, being at Rocket Mortgage, where everything was national by definition, always. It's fun to see that the tenure and dominance of local origination and local owned banks, not even branches, continue to be at the top.
What questions might you have as we go through sort of some of the prepared remarks that we have? What questions do you have? What's on your mind as you go through your role and you go to work every day and serving your respective communities in today's mortgage market? What's on your mind? Really? Nothing? There we go. Affordability. Yeah, for sure. And there's some interesting facts that we all know intuitively here in Maine. And the question is, what are we going to do about affordability? Which you're not with Maine Housing. Are you? There was a woman, a couple ladies that I was talking to from Maine Housing. And that was a pretty fascinating statistic where you said what the average age of the average consumer that you lend to or that you assist in a transaction is 32. That's fantastic. Affordability being one. What else? Yes, sir.
People overpaying for properties and what that's going to do to the market.
Fascinating. Overpaying for properties. That's incredible, right? We have a couple.
Sounds like affordability.
Yeah, for sure. Well, and we have some numbers on that as well. What else? So affordability, just inventory, right? And zoning related. That's been a big topic here in Maine, as well as in Vermont, as well. Kind of parallel sort of issues that I've encountered as far as some of the zoning restrictions that prohibit and really limit the kind of development. Some of them have acreage requirements, which decreases affordability, increases purchase price, and it really decreases access to Maynards who, many of which might have local service related jobs or local service related incomes from local related businesses. What else?
Yeah, I was just going to say, I think, so we pulled up just kind of some macro data. Last year, in the past 12 months, the median home in Maine went up by 2.8%, median sold home in Maine. So now it's just a hair over $400,000 for the median single family home across all of Maine. So it's interesting to see in a lot of ways, just the raw numbers of it. But what I think is even more interesting is that certain pockets of Maine, southern Maine, mid-coast Maine, I think, and parts of central and northern Maine more and more too, are on a bunch of lists. I always notice this for biggest appreciation in recent periods. It used to be all Austin, Texas, or Phoenix, Arizona, or Sunbelt in Florida. And really in the past 3 years, it seems like, first of all, most of those markets are down this year. My company has more than half of our team based in Austin, Texas. And they talk every day about how home values have been heading the wrong direction for the past couple of years there because they had such a boom. So I think it's a good and bad thing where prices have been stable here, and it hasn't been a total boom where prices quadrupled over a period of 5 years or something. But it's been a steady march up, and even in the past year, where most markets were flat, a lot of markets were slightly down. Maine, broadly continued to appreciate, average or above average at about 3%.
Tell me more of those that are loan officers here. How do you, and actually geographically, how many of those are of you that are in the Portland Freeport market? Okay, so and then the rest of you drove more than an hour or so away from to get here. And ma'am, where are you from? Right here. Yeah, this cluster of
Mid-coast.
Oh, mid-coast. Okay, great. How about you, ladies?
Bay Harbor.
Bay Harbor. Good. Okay.
Farmington.
Farmington. Okay, great. What would you say to be some of the challenges that you're experiencing, or even opportunities that you're experiencing within your local markets?
The labor market to
Yeah.
find contractors to either build or repair homes is a challenge.
Yeah.
Yep.
Now, as far as the challenge with respect to providing them lending products to that kind of match their sources of income.
Yeah.
Okay.
There's a lot of houses that need a lot of work before they can sell them.
Yeah.
Or even maintain them. But finding somebody to help them fix their home, build their home.
Yeah, it's interesting. A lot of lenders coming kind of through the COVID, that COVID period, pulled back on 203K and home renovation and those departments, right? And if there's a time, it's now to get into that segment, to be able to assist consumers, to provide them with the extra capital to do the renovation. But then there's the challenge of finding the right contractors that are approved to actually do the work in a timely manner that fits, following the transaction. So that's really a brilliant point, and it could be an interesting opportunity for a lender to really set themselves apart. What would you say, ma'am? Yeah. Yep. No. Yep.
Okay. I would say probably in Mid-Coast, anything that's affordable is being snapped up by investors
Oh yeah.
within days on the market.
Yeah. That's
Even if
fascinating.
it's a tear down.
Is that more like true investors where they're going to like operate it as like an Airbnb or something like that? Or is it more like second homes or a mix?
Rental properties,
Okay.
Airbnbs, anything that's affordable is being snapped up. Like I said, even if it's a complete tear down, it's going on the market at priced as improved land without a building on it. And an investor's coming in, tearing down, using the same footprint and putting up something within a month and renting it out at
Wow.
above market rates because it's a brand new property.
Yeah. Yeah, that's pretty fascinating. That's catering. That's basically catering to the vacation, the out of state market that's coming up here and paying $3,000, $4,000, $5,000 a week for some kind of rental, and it's very difficult for those of us that are local to actually be able to afford that. That there's been a number of proposals legislatively around trying to limit, LLCs or investment banks, especially, that are buying these homes, en masse. And I'm actually a pretty strong advocate of that. Actually, I think that's because otherwise every home that an investment bank takes off the market is just one less home that a local family can actually be in, and it ends up pushing a good sizable percentage. About 38 to 40% of renters have the capacity to buy a home, but the inventory isn't there for them. I mean, it's a massive number. It's a massive number of renters in the state of Maine that could eligibly qualify for a mortgage, but they simply are being pushed out of the market de facto because of a lot of the outside investment interests, if you will. Man, what about yourself? You said you were in
Harbor.
yeah, in Bay Harbor. Is it sort of similar issues?
Well, not yes, there are tear downs in pockets because the properties have already been snatched up. I think in our little peninsula of the world, it's really low inventory, or it's inventory that doesn't qualify for conventional financing because you've got a 40-year-old mobile home being sold for $300,000. It's just, it is what it is. And I think in partnership with Maine Housing and some of the other federal programs, I think that's the only way that you're going to bring affordability back to our communities, is something that supplemented the developers being incented to provide affordable homes with some tax breaks and things like that. I think that's the only way that we're going to see our way through. And then banks will be able to help their pre-approval list kind of go down a little bit rather than growing and waiting for the right property to come along. Other than that, our other challenge as a lender is the cash purchases.
Mm-hmm.
I don't see a lot of the sales in the area because of cash purchases.
Yeah. Nationwide, it's about 40%, about 38% of homes are cash purposes. So
it's climbed a lot. Yeah, it used to say 10 or 15% a couple of years ago, and I've heard 30, I've heard 40% nationally. I think it depends how you cut it by product and stuff. But or by you know, home type and things like that. But yeah, the investment investor kind of encroachment, especially with the seasonal rentals and things like that, is makes a lot of sense. Especially there's just not that much housing stock on the coast, right? Especially like the mid coast. It's, you know, not been built, that there aren't that many units, and so that makes a lot of sense. I think you know, Rick, as well as our normal co-host Jeremy Potter, who couldn't make it today, spend a lot of time thinking about and consulting for a handful of private companies that have worked on kind of like first-time homebuyer assistance programs that are certainly no replacement for local benefits, tax benefits, products for people moving to Maine from certain industries, or being from Maine and getting, you know, assistance with their first-time home purchase and things like that. But Rick, I don't know if you want to mention, you know, things, crib equity or any of the other solutions that have come across your desk, either as like a consultant or as like an M&A advisor, that are around first-time home buyer and affordability assistance. I know you see a lot.
Yeah, there are a number of solutions out there, crib equity being one, where they provide, they're in essence like a rich uncle, if you will, that provides, you know, a large portion of the down payment in conjunction with a portion of the down payment that the consumer provides. And they also go on title with the consumer. They're not a co-borrower. And it just purely enables them, the consumer, to access, to be able to sort of jump that hurdle.
And make a more competitive offer in a market like that, where you're competing with a cash offer, right? They might be able to afford, they are able to afford the home, right? They're just getting a boost on their down payment.
That's right.
That can go a long way.
And it just gets that down payment into a monthly bandwidth that they can afford, with the assistance of this outside sort of third party, if you will.
Is that also called equity sharing?
It's
Down payment assistance?
It is an equity share kind of arrangement. I know that can have certain connotations around it. That can be a bit complicated. I would say that the next generation, this iteration of equity participation with the consumer, in ones that are being entertained by Fannie and Freddie right now, because the hard part about these products is that they're not Fannie Freddie products, right? And so that creates a layer of pricing on it and a layer of complexity. And so my work with Fannie and Freddie has been to try to normalize that a little bit, to assist, because, you know, if I didn't have money for the down payment and I went to Brock and Brock said, I'll do it, but I just need to be on the title, that's a Fannie product, right? I'm just getting help from a wealthy friend or a guy who's got means and I don't, right? And in some ways, I'm not getting hit from a price adjustment standpoint for that, right? In the current versions, you do, and I think because of the consumer-friendly equity arrangements, Fannie and Freddie is becoming much more open to having this as being part of a solution to help ease this tension, if you will. Now, I look at that as somewhat as a bit of a Band-Aid approach, because inventory really is going to be the greatest solution. It's a complex. You almost have to have a legislature and a governor that really, and I'm not saying you don't, I'm just saying, like, in theory, you really have to have a governor and a legislature that understands some of the newly innovative home construction opportunities, and then to be able to work with federal partners to be able to provide the underlying assurances on these new projects, because the gestational time periods are 6 to 9 months for new construction. And when there's so much outside funding coming in, I think having short-term programs that assist consumers to help alleviate some of that pain could almost create a little bit of a worse problem, because then all of a sudden, if you have third parties putting cash in, it helps increase the appreciation of the pricing, right? And the only thing that's going to drive price depreciation a little bit is going to be either just curbing demand, which is what some of the inflationary sort of maneuvers that both administrations have attempted to do, and then also to be able to just increase inventory. Because if you increase inventory with an infusion of new products, new housing products out in the market, that might take 90 to 120 days to build versus 6 to 9 months, then all of a sudden you have, with smaller footprints, easing some of the, maybe having multifamily, maybe duplexes, or easing on some of the restrictions around the zoning restrictions on property. Because in some cases you can only build on an acre or two or even larger, for new construction. So some of those zoning sort of easements, if you will, or zoning to take the pressure or the foot off the pedal of some of the zoning requirements, I think will help ease that.
Even around, I know this is big in northern Maine, where I grew up around Presque Isle. You can only subdivide a property, very rarely. You can do it depends on a million factors, as far as I can tell, and I'm no expert on it. But I know that it's only every few years you can subdivide it once, right? A tract that could potentially, have 100 homes built on it would take 50 years to subdivide it into enough lots. So I think there's, that's like another angle on it, because there in parts of Maine, there's all kinds of area to build on, right? There's a lot of unsettled, unpopulated land that could continue developing, especially with what Rick's talking about with the manufactured housing. It may not help a specific like mid-coast community that's dealing with investors buying, the best lots, but I think there's at least opportunity to get a lot more affordable housing in the parts of Maine that there's room where there's room, right? And whether that's more multifamily builds and zoning around that. I know there's really strict zoning again in a lot of towns in Maine against buildings over a certain height and things like that in historic areas. So all these things have trade-offs. I mean, you don't want to lose the charm of any of these towns, any of these cities. But, I think those types of things should be revisited as, kind of like an outsider point of view that has lived, half of my life in Maine, roughly. That's what I see kind of like looking the same, while the affordability has changed so much in the last 10 years or whatever.
Look, yes, ma'am.
I'm having a lot of conversations with people about intergenerational living.
Oh, yeah.
Detached ADUs. What are you hearing or seeing?
So this is coming up a lot in New England, especially in the state of Massachusetts. They just allowed for 800 square feet, 8 to 900. I think it's 850 or 875. That's the minimum size to be able to do some of these sort of these RDUs, if you will, and for these, within on your property that otherwise wouldn't, that would violate local zoning ordinances. So this is becoming extremely, extremely important, I think, exactly for that. The challenge with that is it doesn't ultimately serve, and so it services a very short-term problem. The problem is it actually could create the longer-term problem, because what happens is you put a 1,000 square foot detached on your quarter of an acre or half an acre lot, and you start, and then all of a sudden it's no longer for mom or dad or for a grandparent. All of a sudden it becomes a rental property, and you're getting $1,500, $2,000 a month for that. And all of a sudden it just ends up increasing the price appreciation of that property substantially, and it really doesn't help with the affordability, because those who can afford the 50 grand or 70 grand to actually build something like that in your yard. So then there's going to have to be programs to be able to provide capital to do that, to be able to, so I see what's hard. Everyone's always looking for kind of a smoking gun, like a single bullet solution. I think that's one spoke in that wheel that could be part of that. The problem is if it stops there, or the innovation kind of stops there, I think it really misses the mark in a big way.
Yeah, I think it's, anyone that wants to read further on that topic, because I'm not really, I don't think either Rick or I are experts on this specifically, but I've heard a lot of chatter about, especially post the fires in California in the last couple of months, around California investing both public and private money into the ADU structures. So there's a lot of opportunities to get like basically a HELOC or a home equity loan on the house, plus some state money, plus maybe around the fires, some federal money that can go towards doing those things. I totally agree with everything Rick said, that is certainly not a silver bullet solution, but it would sure help in a lot of these markets to spin up a bunch of property quickly and cheaply, and and allow current owners to further monetize and maybe hang on to homes that otherwise they may have to sell. So California is kind of like an extreme around, Orange County is an extreme example of that in the last few months. If you want to look at like the most extreme version of that.
Can I help to be portfolio lending, to have two dwellings, two detached dwellings?
Well, I think the banks, this could be a real opportunity. If I was a chief lending officer or chief credit risk officer for a bank, and what's hard is these types of roles tend to come with very specific personality types, and they don't tend to be the innovators. They tend to be the ones that kind of circle the wagons and kind of keep a tighter knit. But that's a great opportunity to be able to finance those and hold them in portfolio, because the rental income for sure would help support and probably prevent some of the default rates or the default risk. And even if you had to foreclose on the property, now that there's a second source of income on the property, potentially, I think that there could be a real opportunity to be able to work with a local real estate agent, our local real estate agent up there, and to be able to sell that property very easily in today's market for sure.
But I think a lot of the money today is kind of a workaround where you get something like a HELOC or you refi the primary home, and then you use that money that's not explicitly for the ADU. I think is how it's working today a lot of times, which is probably underselling it. There's value to the ADU, and it's probably not being recognized.
I just wanted to add some color. So the Maine legislature passed a law last year, 772, that changed the ADU rules.
Yeah.
So if you're not familiar with that, you should look into it.
So is that statewide?
Statewide,
Good.
yeah.
Okay.
So the stopgap is local governments and NIMBYs and Yarmouth and a lot of the places where, we do need affordable housing for teachers and firefighters. And
Yeah, oh yeah.
Places. And there are two bills in the legislature right now about expanding the number of units that you can subdivide without municipal subdivision approval. So right now it's 3,
Excellent.
and it may go to 5 if everybody agrees to that. But that's not always a quick solution. And again, the town's a stopgap there.
So when you say the town is a stopgap, you're saying the town is a barrier. It has to be. It's like local approval.
Yeah. I mean, a great example is like Wyndham. I hope there's nobody from like the town here. But I was at a call the other day, and they basically said they have X number of building permits. They basically pick and choose. They pick like 5, 10 projects they want, and then everything else goes to planning, and then they pick the people that they want to do the projects.
Yeah.
That's not how it should be,
that's
right?
that's tough.
So like then you've got the city of Portland who has a significant number of, if you build, this residential unit, you have to have X number of affordable units. Well, as we all know, building costs are so expensive. It's really hard to build affordable and be able to make money from that, right? So then we try to get money in the state government in order to be able to, backstop some of those costs. But the cities are making it harder to make affordable housing, from their own perspective.
That's really exciting progress, though, at the state level. I don't know how much our digital listeners were able to pick up on that, but there's already been one bill passed last year related to the ADU conversation we're having, 2 more in the pipe and moving forward, and also related to like the subdivision conversation that I started without knowing the details a second ago. So that's super exciting to hear that there's at least state level solutions, and it'll probably just take time and local lobbying for the people that don't want to be, for everyone that's lived in these towns for a long time and doesn't want to be priced out. That's exciting though at the state level that those doors are even open.
It's interesting in Massachusetts. I was just sort of looking this up. In Massachusetts, they actually circumvented and superseded local municipal zoning boards, where they couldn't, as long as it fit within the state defined parameters, that the zoning boards, they didn't have to go to the local zoning board for approval, which I found pretty fascinating. Now, but the devil's always in these details. If you get a permit for like electricity or sewage or town water, that sort of thing, or to tap into sort of the primary domain on that property. And that's what I was looking up just to see if there was any kind of ways, because it's great to say you've done something on the state level, but if it's not deployable, it's kind of it's a useless sort of legislation, right? Because you're you're able to say you've done something, but in the end, you've done nothing.
It at least puts the pressure on the local
And
conversation.
that's a good counter.
Yeah.
That's a great counter.
I mean, without it, there's not even a local conversation at all. So, but yeah, it's certainly not a silver bullet like you were saying a second ago.
What else? We've had no questions or comments from men in the audience. I think the women in Maine are definitely strong women up here. So what about the men? Any questions at all? This table of, actually, you know what you did? You did say, Mr. Mortgage Equity Partners, you did say something earlier. How about, so you're coming up here. You don't live in Maine. You live in New Hampshire?
One thing just to note.
Yeah.
ADU and financing, there's a lot of ways to do that. Renovation loans, home style, 403K.
Mm-hmm.
But also we have a renovation HELOC that goes after, based on after improved value. So if we're putting an ADU on, we'll take that in consideration of the value, but the 95% of the total value to finance that. So there are options when you're trying to finance those type of units.
See, I love that. See, and that's sort of the benefit of local lenders, like really working with local lenders, because whether you're a local bank or even if you're a local bank that doesn't have the appetite for that kind of product, that's a great partnership opportunity to kind of say, like, look, here's a consumer that we potentially could serve together.
Right.
Maybe the bank's done a couple units with that particular consumer in the past. Here's an opportunity. Let's say the bank doesn't want to lend to that individual in this particular need, and there's a good partnership opportunity to be able to sort of, supplant that. That's where sort of working together is going to be really, really important across channels in ways that really haven't been, I don't want to say possible, but they haven't really been explored, in the past. But good for you. I know that, you guys have a great reputation in New England, especially. And I love to hear that. What else? What are some of the other
Anything
burning
else?
questions that you have in Maine on your side of it? The housing appreciation side of it, what was the statistic that you uncovered within the state of Maine on the housing appreciation? It's similar to other parts of New England. In Vermont, I had 100 acres next to me that I could have bought for $115,000 in 2019. Today, that 100 acres would go for about $500,000, right? And in Vermont, and very similar to Maine, where you get tax allowances where the state will pay you to not develop on the land. So about 46% of the entire state of Vermont, and I think it's very close to that number here in the state of Maine.
Yeah.
It's totally you can't develop on it. The state pays individuals. I could buy, I was looking at 1,000 acres of land for about $2.5 million in the state of Vermont. I could buy that land, but the requirement is I can't build on it. It's everything. It's everything above. You could do whatever you want above ground, basically. Below ground, you can't touch it, right? Which is great. It's why Vermont's 500,000 people. And it's been that way since, a long time, since probably the 1960s. And in Maine is 1.5 million or so, 1.6 million. But these are the types of restrictions I'm all for. I'm from Vermont. I mean, I'm all for, creating a good environmentally sound environment. I mean, that's why we live in New England, for the ocean, the mountains, and the streams, and the things that we do. But we do so at such a negative, to our disadvantage when it comes to housing and inviting people to live here, the teachers, the firemen, the policemen, and other service-driven industries, waiters and waitresses. You're basically forcing a good portion of these people to just rent because you're not providing good solutions, like prohibiting me from building, 1,500 square foot or 1,000 square foot homes and doing a dozen on 1,000 acres. I couldn't do it.
Yeah, and even starting to see, I've know a few companies that work in this specific industry, not in Maine necessarily, but where, I guess L being here would be, potentially a good example. Not a real example, but just like in theory, where they have to have so much workforce in one small town in Maine. They have to build effectively, dorms seasonally for people to come in and live there. I know on a lot of islands and even some of the mid coast in Maine that I believe is a reality. It's super common in other parts of the country, like around major ski mountains, West Coast, Hawaii. And I have friends that work in that industry, and it's great if a corporate sponsor wants to, buy an old hotel and develop it or something. but it really is a workaround for it. You know, it's a Band-Aid that doesn't solve that the people that work in a town can't afford to live there. So I almost don't like seeing those type of developments, even though it's nice in the short term. But the data we were looking at in terms of just trying to zoom out to state level data is that the median home price in Maine doubled from today, from I guess March 2025, from the middle of the year in 2010, basically. So that's, you know, a lot less extreme than some like the Sun Belt states, but it's still, you know, 10x price increases in the average home since 1980. You know, it doubled in the last, you know, 10 years, roughly 15 years, a little bit less than 15 years actually. And so, you know, it's like we were saying at the beginning, it's really just no relief seems to be coming. You know, it's just getting a little worse every year. In some communities, it's getting a lot worse every year. But yeah, I think that's what interests me. I think where there hasn't been any reset, you know, ever really, where prices actually went down and affordability increased. It's just been a steady, slow march upwards.
Yes, ma'am.
One of the things I was seeing when the article was talking about the different, like the income needed to buy a property for a family.
Oh yeah.
State. And Maine is still the lowest in New England, but it's still at 128,000 as the median income needed for a home to buy a home in Maine. And it's like part of the problem is too, it's like not only are the house prices and everything rising, the income's not going with it.
Yeah.
So like the average Mainer, tell you right now, is probably making $128,000. So that's what, like you were saying, is like keeps people in that rental place, but then we're also at a part of the point where the rentals are high.
Yeah, that's an eye-opening stat. I like looking at, you know, with the change in mortgage rate, how many more people can afford or not afford a median home in an area. It sounds like across the board in Maine that's a really painful number. I don't know that specific number by borrower count. I've looked at it nationally, where you probably know these numbers, Rick, where it's like every 10 basis points mortgage rates go up or down, you know, it opens up, I think, like 50,000 more potential buyers that can afford to buy, you know, first-time home buyers. In Maine, it's probably even more extreme than that, with not that mortgage rates are the whole problem. We're talking a lot about inventory and home prices. Obviously, it's multi-threaded there, but that is an eye-opening number. I don't know if our Mike probably didn't pick it up. $128,000 household income to afford the median home in Maine now.
So, and what's ironic is the average household income in the state of Maine is 73 grand, and it was only up about a point or two from last year. So if inflation's 4%, and the average income went from what it was last year to 73,000, which was only up about 1.5% from the previous year, you're making less money the more you make money every year, because, you know, inflation is eating up that extra delta, right? Yes, sir.
So we talk about inventory, and that's obviously a challenge with so many mortgage rates that are so low that were taken out during the pandemic, especially, you know, and having rates higher now. How much do rates have to decrease to incentivize those that are in a lower rate to potentially sell that home that today they have such a low rate, they don't want to leave it. And so they may be looking to upsize or downsize, but either way, they have such a low rate that there's a disincentive to leave.
You know, there's been a lot of talk about this, and they call it sort of a rate elasticity around this, and so at least the speculation is really around like 5.75%, about 5.75, 5.8 is where it begins to sort of unlock those consumers who are willing to give up their 3.5% or 4% mortgage for a 5.5% mortgage or 5.75. There's just sort of a mental barrier, anything above 6%. I know for us, you know, especially at NFM, it's funny how when the market dipped, even a week or two ago, or just over a week ago, that Thursday, Friday, where rates went down, you know, suddenly, we had about a 25% increase in locks. That in that 24 to 38 hours, it just jumped like that. And then the moment that Friday to Saturday, we had that ice cold effect, and things went back up to about 6.5%, 6.75%. All of a sudden, like it just, consumers, my loan officers that essentially quoted a rate, if you will, but didn't lock the rate, all of a sudden couldn't really deliver on that rate because the market had moved that fast, right? And the same thing with that week or so last September when rates went down, we saw a 30-40% surge in
that
activity, not just on the refinance.
Refi boom. Yeah.
Yeah, not just refinances, but purchases. So that demand is there. That demand is absolutely there. It's just a matter of every half a point or so, it loosens up about 500,000 homes nationwide.
Yeah.
Okay. Because we sold about 4 or 5 million homes last year, financed about 4 or 5 million homes last year. And so the real healthy numbers, we need to get to about 6 or 7 million to really get to about 2 trillion nationwide or higher. But the problem is we're about 4 million homes short nationwide from an inventory standpoint. So if you boil that down into Maine, that's probably about 300,000 homes. That should be on the market. That's not. And so it's a huge deficit to close, and it could be closed through some of the innovative sort of construction solutions that are with 3D printing of homes, and there's concrete homes. There's different, prefab manufactured homes, and we're not talking trailers, even though your single wide trailer is not your daddy's single wide. Okay. Because today's single wides, and I was on the Virginia Builders Association board, and single and double wides are $250,000, $280,000 now. I mean, these are nice homes that really should be allowed. But then like the woman said about the local zoning restrictions, people always just think, because they're my age and older, and they're saying, I don't want a single wide in my neighborhood. It's like, well, that single wide's pretty nice. Have you seen the new construction single wides these days, or the double wides, or even some of these prefab sort of solutions that are out there? It's pretty remarkable. But so there's a lot of educational aspects that needs to happen. And I agree with you. I think you said it way better than we could have, to be honest with you. I think that the louder we are as an association, and that's why the association is so important, is to legislatively work. And I would call your local legislator. I mean, it seems really ephemeral to be like, oh, that person's not going to listen to me. They'll listen if enough of us communicate with our local legislation. And Maine is a small state. It's like, just like Vermont, it's like your access to the governor is a lot, you're probably 1 or 2 degrees of separation from the governor. I know in Vermont where you're half a degree of separation, to be honest with you, And so it's really easy to get the ear of people who really can have a difference on these, to be able to jump these hurdles in a very, very meaningful way. Just out of curiosity, from a depository standpoint, I know Leader Bank out of Boston has done a really good job with AI. We're from a non-depository standpoint are I would say probably leaders at AI. And AI to me is just all about the velocity of decision making very, very smart, very fast decisions to be able to, in a manner that lowers cost that you can deliver to the consumer. And so my question for some of the banks, you have the money to do it, but I don't really see a lot of activity yet. And so I'm curious if there's any banks and that you guys who represent banks are doing anything meaningful within AI, or you feel that there's something on your roadmap that you can talk about. Is there anything? So I would encourage that for sure. I would say depositories are very protected here because you're 55% or so of all mortgages in the state, and the average age of the average mortgagee is older, so the AI isn't going to be quite as impactful. But AI is here to stay, and it's real. Like we'll do $8 billion or so in loans, and we'll probably, our goal in the next 3 years is probably to double that to maybe 15, 16 billion. But we're planning on only increasing about 25% of our overhead. So we'll more than double our production capacity and volume, but only increase about 25% of our overhead, which means decrease costs, mortgage money, to be able to, in part, pass down to the consumer for savings, innovatively assist consumers on down payment assistant type programs. So we're organizing methods to be able to do that ourselves to kind of self-insure that. And then also be able to innovate and reinvest that money into new technologies to be able to be more competitive, right? but I encourage banks to do that, because banks are trusted. You're already the trusted brand, way more than any non-depository that's out there, right? So you can combine that trusted brand and that trusted sort of presence in your community by being potentially a real leader and innovator on some of the technology that's out there.
Yeah, and it doesn't have to immediately be, full access to all consumer data, right? It doesn't have to be handing over the keys, right? You can use new technologies. This is a lot of what my company NewZip works on behalf of the 40 or so lenders we work with around the country. Is really just giving consumers more of a path to home ownership. Giving them really detailed real estate market data, really detailed affordability data, steps to take with improving their credit, steps to take with maybe expanding their home search to areas they may actually be able to afford in. Rick and I both are pretty close with a company called FinLocker that specifically helps kind of like early funnel, not quite ready to purchase yet borrowers, especially first-time borrowers, to get financially ready. My company spends a lot of time helping people start that real estate search and get educated about that real estate search and get matched. And maybe they already have a realtor and we're kind of just playing an assistant role, or we have an agent matching solution. But for local banks, I'm sure you have deeply embedded real estate partnerships already. So you don't have to throw out everything, but you can augment your outreach, your marketing, your consumer workflows, using AI basically to give the consumer a digital experience that saves everyone a whole lot of time around blending together the real estate process, the mortgage process, and everything that surrounds it, insurance, title. So that's a lot of what my company spends time on. And I think a lot of lenders see that as a little bit safer first step than actually making like risk decisions and things like that. Just helping augment communication after hours, FAQ answers, if someone chats with you and things like that. So there are different ways to think about using AI, quote unquote, and they don't all have to be, risk decisions.
What were you going to say, ma'am?
I was just going to ask you, from an AI standpoint, what is the highest impact in being able to double your production while we're not doubling your overhead costs? Like, what's your biggest, highest value driver?
I would say there's probably three different things. One is on audits, legal audit, even on the underwriting side of it, to assist on the actual underwriters that sign off on the files. We've built some custom sort of engines to assist our underwriters. So our underwriters, instead of underwriting 40 units a month, they could underwrite 60, 70, 80 units a month, right? That's probably the most scalable kind of component. In the most expensive, right? Because the underwriters tend to be the most expensive resource. Totally worth it, of course. But I'm just saying, like, they just tend to be the most expensive. Post-closing, audits, legal, and even some of the custom LOA-like features to be able to create communication components to seek documents from consumers that a traditional LOA would be used to do. Okay. And again, it's not necessarily about replacing the LOA. It's about being able to scale the LOA so you can service that many more consumers, right? The ones that you have. But that's what's going to stretch an existing staff count to substantially greater volume numbers than what you're technically capable of doing here. Even from a loan officer standpoint, to be able to increase your number of per closed loans per head. In our system, you could literally, we call it sort of a chat GPT sort of assistant, because it's a private proprietary chat internal to our organization. And they could literally say, like, over the last 10 years of loans I've done, like, I want to save a minimum of $150 or more given today's rates and our margins, and send out letters and email, text communications to my consumers. And it'll just it'll just display a list of all those consumers. It'll send them text messages, send them an email, and you've done it in like a second. So part of that is having an intuitive, even another it's all about the velocity of decision making. I can go into our ChatGPT system and say, and what was your name, ma'am? Emily. Okay. I have a meeting with Emily today. Tell me like the last 5 conversations I've had with her, or last 5 emails. Summarize the last 5 emails I've had with her, right? So I don't have to go through and search for Emily and see all these emails and try to figure it out. And it'll, in like a half a second, it'll be like, here's what your meeting's about. Here's all the conversations you've had with Emily. And here's some questions you probably should ask Emily when you talk to her next, right? And I have that in like 1 second, right? So I don't have to like data dive into my email to figure out. I mean, it's going to get to a point where like you may have been like, hey, Rick, I could have sworn we met one another one time. And it might take us a few minutes and be like, oh yeah, you know, you guys spoke at our conference however many years ago. It's going to get to a point where like you'll automatically just know that, right? So there will be no like conversation that you've forgotten, for better or for worse, and there will be no deal that you've forgotten. It's all going to be, that information is going to be front and center. And again, it's all about the velocity of decision making to be able to both decrease costs and serve the consumer as fast as you possibly can. Yeah. Is there any other sort of final and closing sort of questions or comments? Especially comments are even better than questions. Anything at all? Everyone's asleep from lunch?
You're trying to let Emily give us the hook.
Yeah. Emily, you have any questions for us? No? You're looking at, University of Maine, looking at Southern Maine and Portland, Bowdoin, his alma mater. We're going to look at all kinds of colleges up here. Your mom and I want you close.
Okay. Thank you guys for having us out here.